Everybody, it's Blake here at Trade Tracer. As always, none of this is financial advice. Trade and invest at your own risk. We are going to get it kicked off here with the S&P 500 SPY pulled up here on a daily time frame, and we all know what to do when we enter downtrend. All right, so right now the S&P and the Nasdaq is entering a downtrend. We had a 23-day uptrend that we got paid very nicely. Could have gotten long here back on October 14th. If you didn't get long, no worries. 2-day bull flag above the cloud. Rules to get long, and you got paid. All right, so these past basically week and a half has been very choppy. And we had the warning signals when we entered no trend, and now trading in a downtrend. The primary objective is to wait, have patience, exercise patience, guys. You don't have to trade the downtrends and the no trends. We make our money in the uptrend. All right. So what am I doing right now? My personal risk profile, I am sitting in cash. Now, if you are somebody who's more of a position trader, swing trader, you might be long this buy way back here after these COVID lows back from 2020 or even further back than that. But right now, I'm more of a hybrid trader. I like to capitalize on these trends, these short-term trends, and I like to get long the index first, and I'll press long with options with trades from our daily trading playbook that goes out every single day. Those of you that follow us, we've been doing very well with the trading playbook in this past uptrend, and that's no surprise, right? We make our money in the uptrend. So right now, it is time to pull back the throttle, press the brakes, do what you got to do, protect capital and year-to-date gains. All right, it's very, very simple. Can you buy this dip if that's your strategy? By all means, suit what fits your risk profile. But our strategy, we are not buying this. We are not trying to buy the dip, so to speak. We are making our money in these trends, and right now we have a downtrend with confirmed momentum to the downside. So let's take a look at the Nasdaq. Similar story. One of the things that I don't like about this is we have bearish divergence on the index. So what do I mean by that? So bearish divergence, we've got new highs, right? But those new highs were not confirmed with momentum. So we've got new highs without MACD confirming that momentum. So declining MACD when price is increasing. And then when we have these gap ups up to new all-time highs, sell off hard, and then break below that as well, and you're breaking trend, that's not what you want to see, especially when momentum's not on your side. And it's a similar story with the S&P, maybe even worse actually. So the S&P, made new highs with a MACD bearish crossover, and then just got destroyed the later part of the week last week. So when I see bonds ripping and the VIX ripping and equities taking a back seat, it's time to be a little more defensive. Not the time to be pressing the throttle to the floor and hitting the gas. In my opinion, we need to be pulling back the reins, letting off the accelerator, getting some hedges in your portfolios, and playing it safe. Our strategy, we make our money in the uptrend. Right now, we don't have rules to get long. Let's take a look at crypto really quick. Bitcoin, bear flagging below the cloud. Don't really love that look. Back below previous high. So yeah, this could potentially be a double top. I am very, very bullish on Bitcoin and Ethereum if we're talking long term. But right now, I don't like this price structure. We need to see price back above this cloud. Ethereum, similar story. So you can see I have a couple anchored VWAPs from here. This previous anchored VWAP is from this, change of sentiment, change of significant change in the market here when we had this thrusting candle break above the cloud. So that's where I've decided to anchor it. You can see it acted as support here, here, here. Now we're flirting with this same anchored VWAP. Currently, price is below that anchored VWAP. So I'm recording this on Saturday, the 26th. So we'll see where this is on Monday. But currently, right now, price is just flagging below this 10 SMA with really no momentum. I would like to see price back above, the 24th high, which was 4,556 and 20 cents. So above there, yeah, you got rules to get long again. So I think right now it's kind of a no man's land. You're just kind of holding previous swings and managing your positions. No new ad at this point right now with Bitcoin or Ethereum. Let's talk about the bonds really quick. I did have this pulled up here, but you can see, longer term, bonds are starting to catch a bid. We have a MACD bullish crossover, and this past Friday we had a huge gap up and just rip higher. So, I'm not gonna sit here and try to pick and choose and tell you why the market reacts a certain way, whether it's news or COVID or fear or inflation, geopolitical risk, whatever it might be. We trade price structure. We look at the charts. The price structure reflects everything known and unknowns in the market, and that's what we pay attention to. And right now, bonds are looking pretty solid. So last week we added 20% into our investment portfolio, 20% TLT into our portfolio last week. So that should tell you how I'm feeling about the market right now. Yes, I'm still long equities. I'm not leveraged long, but I also have a hedge with bonds. So just gotta always make sure you're protecting those gains. And when we hit the uptrend, that's when you get aggressive. And when we break trend, when we get into the downtrends, that's when you start to pull the gas pedal off. So just simple stuff, trading like a robot every single day, nothing changing. And that's how you build consistency over time. So right now, I'm sitting cash. We are in a downtrend. I'm probably not going to be doing anything until we get another uptrend. This last downtrend, I completely sat out all of this, and it was very rewarding because it gave me a lot of time to myself. I didn't have to worry about the market too much. I knew we were in a downtrend. And then, yeah, right here we had a signal, hey, get ready. Never had rules to really get long until we hit an uptrend on this candle here. So on the 14th, you could have gotten long and enjoyed all of this. We had trades like NVIDIA and Tesla and Apple and, AMD and so many others that paid very nicely. But just to wrap up, to reiterate, we are preserving capital. You don't have to trade every day. We're in a downtrend. Go have some fun. We will have another uptrend at some point. Maybe there's some bullish seasonality into potentially a Santa Claus rally, right? But once again, we're going to trade price structure. If we get price back above the 10 SMA, then we'll have a more bullish thesis. Until then, take it easy and manage those positions with scales and stops. See you guys on the open.